What is the difference between people who have built wealth and achieved financial freedom and those who haven't? There are 9 fundamental truths about investing in wealth that 99% of people either do not know or choose to ignore. Watch till the end of the video because the last point is the most fundamental truth that will change how you think about investing and wealth. The first truth is that wealth is built in decades, not in days. Most people overestimate what they can do in a year, but underestimate what they can do in 10 or 20 years. Think about it. Jeff Bezos did not become the richest man in the world because of a one-time trade. He became wealthy because he built Amazon for 25 years, brick by brick. The same applies to investing. You don't need a lottery stock, you need consistency. Let's get one thing straight. Nobody, not even professional traders, can time the market consistently. If you're waiting for the perfect dip to invest, you'll probably miss it. Meanwhile, the boring investor who bought an index fund and probably forgot about it may outperform a lot of active traders. Why? Because human progress is relentless. Over time, markets go up because businesses innovate, populations grow, and technology improves. Yes, there will be crashes, pandemics, and panic. But every crash in history has looked like a buying opportunity in hindsight. The winners aren't the predictors, they are the stayers. Truth number 2, cash flow beats net worth. Having said that wealth is built in decades, here's a paradox. While wealth takes time, freedom need not. Net worth is a vanity number. It looks great on paper, but it doesn't guarantee freedom. Here's an example. Imagine 2 people. One has a net worth millions, but it's all locked in land that doesn't guarantee any income. The other has much lesser net worth, but generates passive income flow into his account every month. Who's actually free? Second person, because they don't have to sell anything or work hard to pay their bills. This is why the wealthy prioritize cash-generating assets. Think rental properties, dividend-paying stocks, royalties, or businesses. These are streams that feed you every month. Net worth might make you look rich, but cash flow is actually what makes you feel rich. Your passive income covers your living expenses. You're financially free no matter your net worth. That's the real game. Your freedom is directly proportional to your cash flow. The more cash flow you have, the more freedom you will have. Before we look at truth number 3, hit the subscribe button for more truths and ideas on financial freedom, career growth, and happiness. Truth number 3, liquidity is power. This one seems similar to the previous truth in cash flow, but there is a subtle difference. Cash flow is needed for freedom. Liquidity is needed to take opportunities. Ever notice how opportunities always seem to find wealthy people? It's not luck, it's liquidity. If you have 0 cash reserves, even the best opportunity is useless to you. You might spot land at half the price, or a stock crash where everything is on sale. But if you're broke, all you can do is watch. The wealthy keep a portion of their portfolio liquid, ready for strikes. They understand that in moments of panic, liquidity is king. Everybody else is selling to survive. They are buying to thrive. Liquidity isn't just about opportunity. It's also about security. Knowing you can handle months or years of expenses without panic changes everything. It changes how you make decisions. You negotiate better, you sleep better, and you're never desperate. And in money, desperation is dangerous. Truth number 4, wealth loves simplicity. Have you ever noticed how financial gurus make everything sound very complex? They throw jargons like derivatives, covered calls, and yield curves at you. But here's the truth. Most millionaires didn't become rich because they cracked a complex formula. They picked a handful of good investments, stayed consistent, and didn't mess around. Warren Buffett himself often says that he only invests in businesses he can explain in a sentence. Simplicity protects you from 2 enemies, overconfidence and confusion. Complexity makes you believe that you're doing something advanced, when in reality, you're just increasing your chances of making mistakes. Instead of chasing 50 different assets, ask yourself, what 3 to 5 investments can I understand deeply and stick to for many years? Simplicity isn't boring, it's powerful. Wealth is directly proportional to simplicity. The simpler your methods, the more likely that you will build great wealth. Fundamental truth number 5, protecting the downside is vital. Here's a secret about wealthy people. They don't just obsess about making more money. They obsess over not losing it. Warren Buffett has two main rules of investing. Rule 1, never lose money. And rule 2, never forget rule number 1. Why does he say that? Because losing 50% of your money doesn't mean that you just need to get a 50% return to get back where you started. You actually need a 100% return. Losses hurt far more than gains help. That's why protecting the downside is vital. Rich people think like this. How do I keep more of what I earn? How do I avoid catastrophic losses? How do I make sure that one mistake doesn't wipe me out? Think of it like building a fortress. Yes, you want more treasure, but what's the point if you leave the gates wide open? Wealth is not just about chasing higher returns. It's about making sure that your downside is always protected. In the money game, survival is the ultimate superpower. Wealth is built when you protect the downside as fiercely as you chase the upside. Wealth is inversely proportional to catastrophic mistakes. The more big mistakes you make, the less likely you are to build wealth. Truth number 6. Money is a slave or a master. Here's the hard truth. Every bit of money that you make has two possible fates. Either it becomes your servant or it becomes your master. When you invest money in assets, it works for you. It earns rent, interest, dividends, or appreciation. That's money as a servant. But when you spend recklessly, you create liabilities. Loans, EMIs, credit cards. That's money as a master. Instead of it working for you, you now work for it. This is why the poor stay trapped. They use money to look rich today instead of making it work for their future. Wealthy delay gratification long enough to let money become an army of workers that never sleeps. Ask yourself this with every bit of money that you touch. Am I putting it to work or am I becoming its worker? Truth number 7. Wealth magnifies who you already are. Money doesn't corrupt, it amplifies. If you're generous, wealth makes you more generous. If you're greedy, it makes you greedier. Look at billionaires. Some become great philanthropists, funding education and health. Others hoard wealth, exploit workers, or indulge in endless luxuries. Money didn't create those tendencies, it revealed them. This truth matters because many people think, when I become rich, I'll be disciplined. I'll become kind. I'll start giving. Wrong. You don't magically transform at 1,000,000 or 1,000,000,000. You'll just become a bigger version of who you already are. That's why building character, discipline, and gratitude today is critical. Because when wealth arrives, it won't fix your flaws, it'll magnify them. Truth number 8, you'll never outinvest a bad life. Here's a secret the finance world rarely admits. Money can't save you from a miserable life. This is truly the most difficult truth to understand before it's too late. What's the point of $1,000,000 portfolio if you've sacrificed your health, neglected your family, or built a life that you hate? You've all heard of wealthy people who are depressed, lonely, or burned out. They won the money game but lost at life. True wealth is multidimensional. You need all the dimensions. You need health wealth, energy, fitness, freedom from preventable disease. You need time wealth, control over your schedule. You also need relationship wealth, people you love and who love you back. Of course, you need money wealth, but it is really about the resources to support the other dimensions. Investing is important. Don't invest in stocks at the expense of your health or in businesses at the expense of your family. Because here's the harsh truth. You can always rebuild money. But you can't always rebuild health, time, or relationships. This is why real wealth is directly proportional to balance. The more balance you have in your life, the more real wealth you will have. Truth number 9, wealth flows from the impatient to the patient. This is the ultimate truth that most people never realize. We've come a full circle because this follows from truth number 1. Every market is essentially a patience machine. The impatient sell to the patient. The impulsive spender funds the disciplined saver. The one who wants luxury today pays interest to the one who is willing to wait. The same in stocks, real estate, or even business. Every bubble or crash is really a transfer of money from short-term thinkers to long-term thinkers. The game of wealth is really the game of patience. If you can delay gratification, resist panic, ignore noise, and stick to fundamentals, you'll eventually own the assets that everyone else regretted selling. Patience isn't just a virtue in investing, it's the entire strategy. Hit subscribe, and if you want to know the 5-minute early retirement plan that worked for me, watch this video.